rapid decline in Bitcoin, down 30% in just the last month or so, has many investors wondering whether crypto winter is coming. But my next guest says that crypto will eventually see less volatility. Joining me now, we have Alexander Bloom, 2Prime CEO. Alexander, it's good to see you. So let's talk about this move here. So Bitcoin reaches that record high above 126,000. That was October 6th. Now we're back to about 93 here. We did actually slip below 90. What explains this move? How do you make sense of it?
Josh, great to be with you. Thanks for having me. I'd say there's a couple industry-specific factors along with crypto-specific ones. Crypto goes down 30% sometimes, even in bull markets. That's common behavior. If I've been through in the 12 years I've worked in Bitcoin, it's been down 80%. There's also, I think, just sort of macroeconomic headwinds that people are nervous about. What I can say, though, is that we work with some of the largest Bitcoin holders in the world, corporate companies that hold billions of dollars of Bitcoin, and I had a client today asking if they should take out another loan to buy more Bitcoin, and clients are asking if they can get more long exposure through derivatives. And so I think the constitution of who owns Bitcoin has changed to a more institutional basis, and they see this as shopping season, not a time to panic.
Do you give targets, Alexander? I was just wondering, for Bitcoin, what do you see maybe 12 months out?
I think there's a lot of positive things to look ahead in terms of loosening liquidity conditions, the end of quantitative tightening, and regulatory elements that are changing. That all make me think Bitcoin will be significantly higher than it is now into next year. I could say, last 4 to 8 years ago, we had clients, they did not have full-time lobbyists in DC talking to politicians all day, advocating for this asset and getting rules passed. I think we'll see market structure and new kinds of rules passed because there's money and huge support and energy behind Bitcoin that is here to stay.
Do you think, Alexander, obviously when we think about Bitcoin, we think of a volatile asset. Do you think, looking ahead, does it become less volatile as institutions move in harder?
Absolutely. I think the nature of any emerging asset is for it to become less volatile. You have clients hiring us to trade volatility to pull Bitcoin out of the market for them on the scale of billions of dollars. You have other professional traders doing this. You have a different constituency, like our clients, they own $100 million of Bitcoin and it's 2% of their whole sleeve in their portfolio. And so groups like that, they're not going to get shaken out because there's a 20, 30% move. They are expecting that and it's sized into what they're doing. And so in the institutional nature of the kinds of clients moving into the asset, you're going to have less volatility because they're just not as reactive. These are long-term holders looking for macro upside and inflation hedges that are okay with small moves, 30% in the short term.
Do you have line of sight, Alexander? I'm just curious, maybe you or even third parties, about just sort of who owns Bitcoin now? I mean, is it Josh and Alexander or is it institutions?
It's increasingly institutions. Our client minimum is $10 million. And so all I know about is the institutional side. And I can say the clients we have are adding more Bitcoin into their portfolios, family offices and fund of funds, public companies with not just Bitcoin on the balance sheet, but cash flow to buy more Bitcoin. And then I think that there are, BlackRock and the like promoting this for the retail crowd or the high net worth individual crowd. And so the composition has certainly changed towards more institutional buying over the last just even 2 years.
When you're talking Bitcoin, Alexander, I'm curious to get your take on that digital asset treasury theme as well, that DAT theme. I'm looking at strategy, which was higher today, but it's down, nearly 30% in the past month. I'm just wondering, do you think there's any kind of broader message that's sending us as investors?
DATs are essentially closed-end funds with expenses. It's Bitcoin with expenses. Some of them, like strategy, are uniquely positioned to maybe add extra value. I think there was a trend of just so much excitement around Bitcoin and public markets that people rushed in. What I'm seeing with groups that we're talking now is there's real operating businesses that are going to add Bitcoin to their balance sheet or are going public with an intention of being Bitcoin balance sheet businesses. And so I think we're transitioning from just companies that bought Bitcoin and they get to hold on and charge fees on that Bitcoin to companies that are building Bitcoins, like ours, built around monetizing and doing things with Bitcoin. And so I think the standards for what public companies that work with Bitcoin need to achieve to garner real investment from both retail and institutional is changing. And the ones that aren't doing well are going to trade below NAV because it's just Bitcoin with poor management and expenses. So that's how I see it.
I'm curious, Alexander, maybe you've had this conversation if you run into friends and family and they say, why should I own Bitcoin? I'm just curious what you tell them, what kind of the thesis is there, and then how you say you should own Bitcoin. Do you tell them Bitcoin, ETF, no, pile into a levered play like strategy? What do you say?
I think there's, I guess, three things come to mind. One is you just point to the track record. It has very low correlation historically to almost any other asset, and it's up, I don't know, 10,000% over the last 12 years. It's hard not to think that's great. Even in the current regime where it's maybe more muted returns of 20 to 30% a year, that's a phenomenal asset. The institutionalizations make it even more attractive to own. I would say beyond that, just watch what the government has done with our money over the last 5 years. They've printed half the money in the world into existence and inflated away the money that we've had unless you've owned hard assets like Bitcoin or recently gold. And so you want to own hard assets, and Bitcoin is the hardest asset. And then beyond that, I just can speak to our experience of the energy and amount of new companies coming to us that are of institutional size that are either already in the market or getting ready to enter to the market that give me a lot of confidence.
Last question, Alexander. We talked about potential catalysts, opportunities. If I asked you what's the biggest risk to owning Bitcoin, what would you say?
Oh, I think the biggest risk is your emotions. I think if you can step back a little bit and own Bitcoin like an institution does, like our clients do, then you just have to hold on for the ride. You don't have to do a million things or decide when to get in and when to get out. I think Bitcoin's ultimately going to $1 million per Bitcoin. And so the hardest thing is just to do nothing and let the asset work for you.